get away to where the boat is from, so get away. Where the boat is from, it takes away. Look at big problems. You can worry, you can drive them in the blue ocean, but you gotta get away to where. So get away. Where the boat is from, it takes away. Look at big problems. You can worry, you can drive them in the blue ocean, but you gotta get away to where it's from. Gotta go. Order filled. The driftwood sign at the end of the bar with that's on a map that says here's where you are. Up there, miles and degrees that point to wherever home used to be. We come time, and we come reason why we're out here. It's where we go. Different ways, it's just where we play some sick. Alex, we ain't all there. At the end of our ropes or the end of the line, got a few loose screws, got a tie their anchors and sails with tattoos and scars. We've all drifted out just a little too far. We were all misunderstood. So we got as fast as we move. That's where it's going to go. Just that way, that's just where we're going. Raise and train. And it's right. We're in the check it down. Yeah. If we know we can.
Good morning, everybody. Hey, good morning, Mr. Chris. Good to see you. All right, we'll get started here in just a few seconds. The computer's been running just a little slow this morning, so I'm not going to put up the video so we can get through a lot of charts. Yeah, we just had some news that came out, which was Canadian employment change, and it caused the Canadian dollar to shoot up. Let's come back over here. Oop, wrong one. Where are we at? There we go. Caused Canadian dollar to pop to the upside. I went ahead and came into it. I'm looking for, I got a stop loss. Price had gapped up into supply, so just look, I got a stop loss right there about that 72091. Okay. Just looking for that, just kind of a news reaction off of that Canadian unemployment or Canadian employment report. Okay, or it's the unemployment report, employment change. Okay. So FX markets have been moving kind of strange lately. Want to keep a close eye on those things there. Also, something that is notable is that I'm watching for an entry again on Bitcoin, the micro Bitcoin, and it looks like we might be getting close to a fair value gap area. Let me tighten that up just a little bit. No, we're right there now. Okay, so I'm already in a trade on Bitcoin. I'm just looking for that nice little entry again where we could manage that risk. Now, remember, Bitcoin is really small margin requirement for the micro Bitcoin, but it does move in $5 increments, okay, and pays out 50 cents per $5 price move. Okay, so we're looking for that opportunity to jump into Bitcoin. You've got about $50 per contract risk, maybe just a little less on that. So I've already got a position on Bitcoin or micro Bitcoin in BT. I'm just going to come over here to the other account and we'll put that on. Okay.
Order filled.
Took a little too many contracts there.
Order filled.
Yeah, let's come back to that Bitcoin chart. Stop loss. Okay, that's all set up for me there. All right, so let's jump right in. We do have the pit open on crude oil. Crude oil has been in a nice trading range in the overnight session. We have seen heating oil have a nice move to the upside, uh, but crude oil has not done a whole lot, but trade in kind of a channel here. Also on a 60-minute chart on crude oil, and you should be trading a January contract, 2026. Crude oil on a 60-minute chart may be a little tricky because you're still in that dead space area. There's potential breakout to the upside or breakout to the downside for the next trading opportunities. Okay. So we will monitor that. Heating oil has often been a lead, a good odds enhancer for us to use as a direction for trading crude oil. We also want to take a quick look. Daily ATR is $1.39 right now. Okay, and we can see that the Globex range is 34 cents. Now, the Globex range compared to the daily ATR, if it's less than 40%, we'll look for a pretty strong move on crude oil. Okay. So the way this works is we take the Globex range and we compare it to the daily ATR. And if the Globex range is about 40% or less compared to the daily ATR, we expect a pretty good trending market. Okay. Just the characteristics about it. Now, if the Globex range is about 50%, well, between 40 and 70% is the numbers we use. If it's between 40 and 70% of the daily ATR, then we expect more of a choppy kind of range bound, especially around the open. And if the Globex range compared to the daily ATR is 70% or greater, we're looking for the bull trap or bear trap scenario. So in the spirit of anticipated move on heating oil to the upside based on what heating oil has done, they've been very, heating oil tends to lead. Okay, I'm going to look at a potential open range breakout trade on crude oil. Okay, and I'm going to anticipate that the breakout is going to be to the upside. Okay, now I'm going to manage my risk. Right now, the entry will be above 59.68, where we'll go long, and our stop loss will be right about that 59.56 area. I'll place that once I'm filled. Okay, I'm using a couple of micros. Now I'm also leaning towards that the small time frame is going to kind of be the setup for a nice breakout on the 60-minute chart. Again, to the upside based off of what the heating oil is indication is. We're also looking at the daily chart. Price is just holding slightly below the 50-day moving average. Okay, price getting back above the 50-day moving average, which would be above the Globex high, would indicate some more bullish coming in. Okay. All right. Let's see. So, and then we got natural gas had a pretty spectacular move while the big players were getting ready to start their day. One thing that I'll point out, just as we talked about the Globex range, 25, almost 26 cents, compared to the daily ATR at about 23 cents, we can see that the Globex range exceeds the daily ATR, greater than 100%. So we're looking for the bull trap or the bear trap trade setup, okay? So we're going to take that Globex high right now, and we're going to go look over to the left. And we're going to see if there's any supply zone just above that range. Well, we're going back pretty far here. Where are you? We're going to look for that bull trap area. All right. Yeah, that's not a very good looking chart, but I think we can make something out of it here. Yeah, that's right, back up to the all time. So we'll look for that bull trap area. We'll just kind of make that a little wider. And I can also go out to continuous chart. Oh, what is the origin of that drop? Yeah, we're right about the same place. Yep, right there now. Okay. All right, so on natural gas, we're looking for the bull trap setup. We'll look for price to jump in right and up into this upper range. Now I'm going to use a couple of micros on this. Not a very big position. There should be plenty of downside if this is going to go back to the down, lower. There's going to be plenty of places to add on to this position. Okay. All right. And yeah, it's 5.300. I'm going to keep this just to like 2 micros. Okay. That way I have enough room to add on, and it's not going to make a big difference if it's not going to hurt too much if I get stopped out. All right, so we do have an open range breakout trade looking for on crude oil, and I'm leaning more towards the upside based off of what I see on heating oil and the location of crude oil daily chart where the 50 simple moving average is, leaning more towards the bullish side. Price move above 59.68. We just set up a trade for a bull trap setup on natural gas. Okay. Talking about gold, gold is now starting to move again back to the upside. I want you to notice the accumulation area and price starting to break out of that accumulation. So make sure you know where you are on the map. As I don't have an entry yet, at least on a 20-minute chart, and I'm not just going to jump in at a breakout on this product. Okay. Okay, and I did take a micro Bitcoin. I did take that long, but I'm already in a position on Bitcoin that I'm kind of swing trading. All right, let's jump over to the S&P. Let's readjust for our Globex range. Now, with the Canadian news that came out, it did cause the market to react. okay, the equity indexes. And the fact that they fell so easy and so fast is and what we saw yesterday, the fast drops and slow grinds back up, is leading and is a very strong indication that there are some liquidity problems up here. Now, the other thing that we've seen on the equity indexes is that they keep pushing higher and higher and higher. Okay. Actually, the Russell is probably right up to the all-time highs again. Now, on these moves to the upside, we have seen that in the pre-market trading that the volume has been getting lighter and lighter. Okay, that's a negative divergence. You can see that on the daily chart. If you go out and reflect and put volume on your daily chart, you'll see that on the price move up, actually the volume has been tapering off. Okay, so expect some very quick, sudden price moves lower. Now, on the 20-minute chart, we can see currently that that sudden drop created a fair value gap. Okay, and fair value gaps have been pretty instrumental in getting into a short-term trend or some momentum. Okay, and right now the fair value gap is indicated to the downside. Okay, so on the S&P, we're looking for price moving back below that 68, 66 area. That would indicate the bearish fair value gap entry. Now, with fair value gaps, you got to give it what the fair value gap requires in the stop loss. Okay, so the stop loss looks pretty big. Okay, don't shortcut this process. Just size your position based on what your trade plan calls for. Okay, if you have a big risk on a trade, that doesn't mean just ignore it. It just says, well, maybe I can only trade one micro or one contract versus trading multiple. Okay, so just be aware of those conditions, especially when trading that fair value gap. Price going back down, looking over to the left, we can see that there's been a large level of accumulation. And this area where we have an accumulation orders is what we refer to as all the orders have been filled in this range. So the next level of demand is going to be much lower. Okay. The price that the pattern has been over the last couple of days, price keeps dipping into this area, but then moves a little higher. At some point, price getting back into this range, all these orders have been filled. It's going to swiftly and easily go through this range. Okay. This is why I'm a little more defensive on taking trades. I'm managing my risk when I take a trade long. I'm just kind of looking for short-term trades. I want to get a good setup to where price will drop into this range and then travel all the way through it. Now, these areas where we have the accumulation, okay, or what we refer to as dead space, where orders have already been filled, is that we look for a swift move past that. And then if we have any demand, it's going to be on the other side of this dead space, okay? So trying to find an entry on this where we might have less risk. We can see that, the fair value gap worked on the bounce for the S&P, and we're looking for price right now. There's a fair value gap on a smaller time frame, whereas we might have the opportunity to spice into that, less risk, okay? And then we'll place our protective stop loss. So it's important to know each contract that you're trading and how much it pays per point. S&P, $50 per point for on the mini. For the micro, it's 50 cents. Or sorry, $5 per point. Okay. And when we calculate the potential entry here, 872, we got about 8 points risk. Okay. So 8 times 5 on a micro would be about $40 per contract with an entry at 68.72. Now, based on your trading plan, what do you plan to risk per trade? Always, per your trade plan, have an allocated risk. Okay. What is your allocated risk? Maybe it's $300 throughout it, or 200, 100. It's okay. It's your trade plan. But whatever your allocated risk is, only take about half that position. Okay. Take half of that position as, like, an example. I'll use $300 as my allocated risk per trade. So my initial entry is going to be about 68.72, where I'll take the trade short. My allocated risk, I'll use 50% of that, so that's $150. We've got $40 divided by 150, so we can trade 3 micros and not exceed that. Okay. So I'm going to place that trade starting off with the micros. I'll start with 3 micros here, placing a sell stop or a limit order out there to sell about 68.72. And we're just about there. And my stop loss will come in to play about that 68.80 for short trade opportunity. So I only have about $120 risk on this trade as I'm starting off with it. Okay. Now you could wait till price comes up into that. You could look for a little more confirmation. It's all based on your trading plan. Okay. But I am based on my pre-market information gathering, which is our daily overview. We've seen that the overnight trade range for the last 5 to 6 sessions has been narrow. Okay. Often this leads to a strong price move within a New York session. Now, also something that's notable is that you watch the Asian London session, and if it's been very quiet in a narrow trade range, okay, you can expect the New York session to be a little more active, a little more trendy. Okay. Well, the last 5 to 6 sessions that we've seen since last week's holiday week for Thanksgiving, we have seen that the equity indexes have been pretty much in a narrow trade range for since that Friday, the 28th of November. Okay. Now, what we have to expect when that narrow range there, that's a form of accumulation. Price can either break out to the upside or break out to the downside of that accumulation. Those will give signals to go that we're going into the breakout phase. Okay. And the breakout phase leads to as reference as a Richard Wyckoff brings us to that spring level. Okay. Now, observing current market conditions, a single economic report has greater impact on volatility when over multiple reports. Now, I'm bringing that up because at 10 a.m. we have multiple reports. Now, PCE report is going to be pretty, it's going to get a lot of attention, okay, especially with Canadian employment numbers coming out. There'll be some comparables. But we do have multiple reports coming out. Okay, so the reaction may be a little slower. And this is an observation. When we have a single economic report, we can anticipate some big spikes up and down. Okay, a lot of volatility. When we have multiple reports, it's often delayed about 3 to 8 minutes after the report comes out. Then we see that volatility move around. Okay. So take a look at the pre-market tips. There's a lot of things that are in the news. Let's see. Okay. Thank you for that. All right. Looks like we just got filled on the S&P. And just come back and verify what your my risk on this is $120. Got 3 micro contracts. Okay. What else are we in? Let's see. Come back to top crude oil. Yep, crude oil is not triggered yet. Natural gas getting close. Canadian dollar almost got us. So we got 1 contract priced up. Okay. Looks like copper has come back down to that fair value gap, looking to continue to move up. We got Canadian dollar, which was another one of our picks. Aussie dollar on a high time frame has just broke out of that long-term trade range and popped up into a fair value gap, looking for price to move back lower to find some demand, and we'll keep a close eye on that. Now, for the Aussie dollar to move down, we would need to see the US dollar move up, and so on. Nice chart on wheat. Wheat is right now in that in a 60-minute chart in that accumulation phase. Okay. And as price goes sideways like this is what we refer to as a dead space. Minimum 3 touches of support, 3 touches of resistance. All the orders have been filled in this range. Now, this is banks and institutions creating a position. Okay. If the price drops out of this position, that doesn't mean they're selling. It's just they're running price lower to find more buyers. Okay. If price goes to the upside, we're looking for that breakout, again, breakout phase. Let me just give you a reference to that, what I'm making. So the map that I'm referring to is right now we see on wheat, we see that we're in that accumulation area. Now, breakout phase, it would be either to the downside or to the upside. And then we have the spring reversal. Now, the spring reversal is often the best trade opportunity that I've experienced. Okay. Trading in the accumulation phase has been very, very challenging. We'll often get a lot of stop outs and not so fun. Okay. The breakout phase is a little more risky. It's a lot more momentum and also volatility. But when you hit the spring reversal, that move out of the accumulation phase generally lines up with a demand zone over to the left-hand side of the chart. Okay. So look for the leg base. Now, if you don't have a leg base or in a sell territory or in a buy territory, okay, then you're going to wait for that spring reversal where you form a fair value gap, and you'll use that short-term pullback into that range as an opportunity to splice into that. Now, this is very commonplace to see the Elliott wave pattern work. And for profit potential off the spring reversal, you're looking for price to go back above the accumulation phase. So when we find these accumulation phases throughout many charts that I've observed, it starts a sequence of other chart patterns. Okay. So the accumulation phase is the start of it, where a lot of folks are trying to figure out what happened here to find a zone and so on and so forth. They all correlate, but what is the sequence of patterns when the banks and institutions are involved? Okay. And those are the things that we want to look for. Accumulation, breakout phase, spring reversal, Elliott wave ABC correction, which has been a very difficult part for me to trade that one. And then we look for the buying point and then the markup phase. Okay. Now, all of this is like a big reversal pattern, okay? And these patterns tend to repeat over and over again. All right. So we're still doing okay on the S&P. We have found some unfilled orders around in that area, but not enough to change the trend yet. Volume still remains light on the Dow Jones. Let's move to the NASDAQ. NASDAQ trade is still working out pretty nicely, but it is also approaching where I need to take a profit. Okay, we've just hit that fair value gap. Okay, we took 3 micros on this trade just prior to us starting, so I'm going to close that.
Order filled.
And then just wait till the market opens. Okay. All right, so we see that again, the NASDAQ has dipped into the dead space, okay, or that accumulation area. It is popping back to the upside right now, going back up to find out where all the sellers. Now, the sudden drop like that and very quick price move, okay, implies a lack of liquidity, okay, and that lack of liquidity can lead to some big price moves. And you notice where it started
Order filled.
was straight through this area. Okay. Oh, we just got filled on our natural gas. And just to expose 341. I took 2 micros on that gas. We got $76 worth of risk on that trade. And that keeps my stop loss right at the distal line. And the bull trap is now active. Okay. Now we went for the bull trap on natural gas simply because we compared the Globex range to the daily ATR when it is 70% or greater. We look for the bull trap and the bear trap. Great question, Ken. Yes, Ken. Yeah, you have to identify basically the structure. Okay. Now that may require you to change time frames. The structure that I'm making reference to over here, I first find that area where we have that sideways channel. Okay. And I may need to turn the time frame up or down to find it. And then I start watching how things play out to the other side there. Let's see, we just got crude oil as well. Okay. Crude oil initiated the long trade.
Order filled.
I think I just got stopped out of S&P. Yep. Okay, let's get back to crude oil. I need to get my stop loss in place. Stop loss 59.54. Target $60.15. This is short-term target up there. Natural gas is holding. Crude oil. Wow, what a spectacular move on the index there. NASDAQ is approaching our prep screen zone. Nice strong move to the upside. I was anticipating for the most part as the markets look to open higher, be alert that we have stop loss orders near the 10 a.m. I am anticipating that the economic reports are going to be a little bit sketchy, basically because of the government shutdown, and the Bank Bureau and Labor and Statistics is still getting set up. Okay, so this move to the upside is going to bring us to a position where I'm looking for an opportunity to take a short trade. Okay, but we need to let things set up. All right. So NASDAQ approaching the prep screen zone, 25,784. Okay. Now, when we approach a prep screen zones are zones that I've used some specific criteria to identify based on volume, time of day the zone was created, and of course, the location of the zone. Okay. But often we look for the prep screen zone price to interact with the prep screen zone on the quarter hour. Okay, so we still got about another 12 minutes for the NASDAQ to get up into that area for that trade to trigger. Now, one of the things behind the quarter hour is that when we look at financial news that the media releases, okay, we see that financial news is released on the quarter hour each time, and that causes some additional volatility, spikes in prices. Okay, so right on the quarter hour, we look for price to intersect with a supply zone or a demand zone for a trade opportunity. And you can see we're only 3 minutes into the session, so we're still about 12 minutes away from that intersection. Okay. I mean, test it out, try it. I'm dropping a lot of my own experience, observations into what we're describing today to help validate and for you to verify what that picture looks like. Now, if you see it happen several times, then you start to incorporate it into your trading plan. Okay, and that's where I pointed out we do have a prep screen zone. It is a high probability area where we're looking to take a trade short. Okay, but I'm looking for that timing to interact with that zone on the quarter hour. And if it comes in there early, often it will go through it. Yeah, S&P did get stopped out. Love my stops. Yeah, we're going to see the volume is, look how light, the Goldman Sachs only got 50,000 shares traded on it. Right? I mean, the volume's extraordinary light right now. And that's why we're getting all this price volatility. Some big swing. Travelers, 44,000, 30, American Express, Amgen. There's a problem with liquidity right now. This is why we're seeing these big price moves on the equity indexes, and then they get these sharp drops and sharp rallies. So you have to be very choosy of the zones. Okay. Now on the overnight session, we did have a prep screen zone just a little bit lower, and it was trading in it. And then I just since it was already used, I went to the next prep screen zone. Okay, so price is still holding out right now on that. Okay. And it looks like our fair value gap. Okay, let's come back and check nat gas. Okay. Crude oil. Boom. All right, let's get that order out there. I'm going to sell at 60.15. That was my first target. And you can see on the daily chart that the next move up, $60.98, is potential. I mean, right now we're getting above the 50-day moving average on the daily chart, which can be a little more bullish. Okay. We're also looking at the breakout on the 60-minute chart. So look up and to the left, find your opposing zones. Let's do that. Maybe we want to stay in it a little longer. It looks like we're going to be. I'm gonna look for a short-term trade on this because I'm doing the class. But you might even get up to that $60.38 for the 60-minute chart, seeing the breakout on that now. Did anyone take that crude oil open range breakout? We're not doing too bad on it. I mean, we had what was it, $70 risk. Let's take the risk off the trade at this point. Okay. Risk is off, covered commissions, and just waiting for my first target to get to. Nat gas. Ooh, taking some heat on the nat gas. Gold is also at an area where we could potentially see a breakout. Okay, but I still really sketchy for an entry. Okay, we're not seeing any buildup. We're just seeing more accumulation back and forth, creating that dead space. And wheat is in kind of at no trade zone at the moment. And we have Aussie dollar is in supply. So we're not fixated on one particular product, okay? We're more fixated on what does the price pattern look like? What are the banks and institutions doing behind that? Crude oil 60-minute chart, as we were talking about, does have a nice potential breakout area above $60.09. Okay. And thanks for the questions. Throughout the presentation that I'm doing here, you're always encouraged to ask questions. Look at that sweeping move up. That drop and move back up was just very light liquidity. So our big economic news comes out in about 20 minutes, which will kind of set the tone for the rest of the day going into the weekend. That was a beautiful entry on that fair value gap. Now, as the market is moving up, I've got the S&P here on my 5-minute chart. When utilizing the tools for a fair value gap, to see a reversal, you need to see a fair value gap being taken out and another one being created. Okay. So as we see the price drop down, we see that there was a fair value gap right here that was taken out. Okay. Once that was taken out, another one was created, giving you the potential place to look for a trade opportunity to get into this. Okay. And so when one is taken out, one is created, then we see a little more confirmation of that reversal. All right, so trying to get this, there we go. And now we have price testing a fair value gap.
Order filled.
Looks like I got stopped out on natural gas with $78 loss. Crude oil. Okay, that compensates for it a little bit. We took the risk off of this trade, looking for $60.15 as our first target. And we can see that price created a fair value gap. We're back to the S&P and is retesting it now. Okay. Look how fast that's dropping.
Order filled.
Went down, found the next fair value gap. All right, so Dow. Nice move to the upside. Let's see if on this 5-minute chart we have any place to get in. There's nice resistance level. All this level here is accumulation, where you have a channel sideways. Looks like we're getting a little bit of a squeeze. Notice on the matrix here, the volume is extremely light. Okay, so this is not a whole lot of people buying. Okay, it's more or less short covering. We can verify some of the short covering by looking over at the internals. The VIX is not moving up. Trend is in the neutral area. And boy, the tick Q and the tick for the NASDAQ composite and for the New York composite, there's not been any buy programs or sell programs. Actually, the upticks over downticks have been pretty quiet as the market is open. That's a big red flag. Okay. And also notice the number of advancing issues over declining issues for the New York Stock Exchange is right smack in the middle of the no trade zone. Okay. So these big volatile price swings that we've been seeing on the equity indexes are on very, very light volume. Okay. As we approach the PCE number in the first quarter hour, okay, which brings us back to the NQ. Never met the entry on the quarter hour. Okay. So we're off to the side there. Got the Dow looking at 48,148. And we have a prep screen zone up there a little bit higher. Come on, crude, get back up there. Now gas overshot our zone. Now I'm still going to look for a reversal out of this area on the 5-minute chart, but I'm going to need I'm going to need the right picture. I'm going to need a price to take out a fair value gap to the upside and then create one to the downside. We'll come back and check on this in a little bit. All right, it's also the time that we're going to start seeing some contract rollover for the 5, 10, 30-year bonds and notes, okay, because they do start to roll over about 21 days, 14 days, okay. There's different times that they roll from the front month to the back month, okay. So we're starting to see some of that contract rollover on the bonds and notes, okay. So that's why your charts are getting a little messy. As you look at the 60-minute charts on the equity indexes, you can see that there is a lot of volatility, a lot of whipsaw up here, okay? Price had a very strong move up and now has been consolidating. Now, this is either going to turn into a rally base drop or it's going to become a rally base rally. And we're waiting for the news to come out so that we can get a little confirmation of what that direction may be. Okay. S&P. Let's just put these to the side for a moment. Now you may see I reference the same chart in different time frames, and I use a tick chart as well, number of transactions. Now sometimes when the time-based chart is so messy and got a lot of whipsaw, I can come over and look at a tick-based chart based on the number of transactions per what I specify. Okay, right now I'm using a 5,000 tick. It can calm the chart down. Okay, same price levels and often the same formations or the same patterns. Okay, but you might see that a time-based chart, each candle is based on a specific increment of time. Okay, versus a tick-based chart where we see specific number of contracts traded per bar. Okay. Well, that was a nice little fair value gap entry and respected the one up above as well. They do change. Now, the fair value gap is, and thanks for the question, Ken. They do change. Okay. Sometimes they'll expose a little more risk and sometimes a little less risk. And quite often you will see that the same area you find on a tick chart, you find on a time-based chart. Okay. So the picture on the chart is what almost every single trader out there relies on as a decision making and for an entry or an exit. Okay. So when you're looking at multiple time frame charts, basically you're looking for the same price pattern. Okay, and this is why we spend a lot of time with the price patterns on the chart. Okay, looking at them using a fair value gap. Now, fair value gaps, leg base, those are our execution. This is where we apply the trade and we understand our risk management. Okay, so if I choose to enter at the proximal line, place my stop at the distal line of a leg base group of candles in a buy territory, that's very specific entry and risk management rules for the application of the trade. Okay. See, as I'm going through several charts and looking at a lot of different price action here, okay, I'm looking for the pattern that's going to reflect what I'm willing to risk on the trade. Okay. And I'm looking for a way to manage that. Now, every trader has their own way of looking at the price charts. Okay. Let's see. There we go. Come on, crude. Let's see you hit that level before top of the hour. Every trader out there that uses charts is looking for certain patterns, a certain feel for the market. And they're also looking at that pattern to help them understand risk, reward, okay, and also trade management. Now, we use the fair value gap to get into, let's just say, momentum type trading. Okay, price moves up, pulls back a little bit, we get back in, and so on and so forth. Okay, up to the upside or to the downside. Okay, so we use the fair value gap mostly to splice into an existing trend. Okay, we use the leg base more around the beginning of a potential trend. Okay, so both of the applications of entering a trade have specific rules. Okay, am I going to use a fair value gap to enter the trade, or am I going to use a demand zone or a supply zone? And those have some very different pictures, even though you're drawing two lines and it says, ah, that's a demand zone, that's a supply zone. I get it. Okay. But we need to have very clear picture in how we apply the trade and our risk management. The application of the zone or using that price range, okay, then helps us size the position based off of your risk parameters per your trading plan. Okay, and I'm being very specific about that because my risk parameters may be different than your risk parameters. The last couple of trades that I took may have been, help me. I might be up pretty big on a day, therefore my mentality is a lot different than somebody that got stopped out twice already. Okay. So sizing that position based off of your trading plan is very, very important. Okay. Now I allocate per my trading plan about $300 per trade. Okay. My initial entry, if it's a leg base group of candles, or even sometimes if it's a fair value gap, is I only use 50% of what I allocate. So I'm only risking $150 at the start of the trade. Okay. And why I choose that number, that's just my personal preference. Okay. You can choose whatever number works based off of your trading account. Okay. All right. What do we got going? So sorry to get in that teaching mode, but there's just not a way to get into a trade at this moment other than, as my friend would say, hit the button, hit the button. No, we just don't hit the button. Wow, look at this price movement. Everybody's becoming very bullish. Except for Russell. Russell has just been kind of a crazy one. Going back to the crazy. We are approaching 6 minutes away from the PCE report. Okay. And as we take a quick snapshot at looking at the matrix, um, we can see that the volume is extremely light on this push to the upside. Now that's raising a lot of red flags. Okay. Light volume price move up. Okay. We're seeing that there's no change on the VIX. There's no change on the trend. And also I want to point out and look at the trend yesterday on all that price moving up was they were selling into that move up. The tick, the NYSE tick, there's nobody coming in buying right now. This is just a squeeze, a stop. It's getting all the novice traders sucked into the market. We can see on both of these that there's been no buy program or sell program coming in. Okay, we can see that most of the advancing issues and declining issues for the NYSE are still in a no trade zone. So as we observe what's going on with the indexes, it's probably driving you crazy that you're not in a trade at this point. But validating the picture on the price chart, okay, the light volume squeeze to the upside, okay. We may even get a further squeeze based off of the economic report coming out, okay. So I'm going to return to the S&P, and for some fantastic reason, if price jumps up to 69.17, that's a pretty big move. Okay, but we've had light volume. It could easily do that. Okay. Now I'm not going to look for the entry for that move up. I'm just going to anticipate that if it does, I want to have a trade up out there. Okay. So 69.17. I'm going to come out there. I'm just going to keep this around 3 micros. It's not going to be a big position. There'll be plenty of places to get into this if the market starts going back down. 69.17 and a half. I'm coming to 17. Okay. On the NASDAQ, Look at that. It came right back into the prep screen zone before the quarter hour. Okay. So when price does that before the quarter hour, often it will go through it. Okay. So I'm being a little cautious on that one. Dow, we'll look for an opportunity. We got about 50-point risk, 50 cents per point. So we got about $25 per contract. I can trade 5 contracts, would be $125 risk. Looking for entry about 48,148. I'll come in. I'll come in. I did 145 just right there. So I have an order set for short 3 minutes before the economic announcement. And once in, okay. Now it may be too fast for me to, because of the light volume. That's why I'm setting the trades up there ahead of time. I'm looking for a push to the upside, and then we're looking for markets to come back lower. Russell's already started its move. Let's see if there's any place here. Yeah, I'm looking for a V-shape reversal on Russell, so I don't have an entry to apply that what I speculate to happen. And that's a good point right there, is that so many of you are excellent at calling the market. Oh, I knew the market was going to go there, or I knew it, but very few can apply the trade and manage the trade. That's the point where you kind of struggle at. All right. And we're about 1 minute away, so let's get back out to the Dow. Dow was pretty close. S&P would be kind of a stretch to get that big of a move. That would be huge. Great questions today, everybody. Thanks for posting the questions in the chat. Please make sure you do the like and follow thing and share with everybody. And next Friday we will have some giveaways for some proprietary prop firm trading accounts to give away next Friday. All right, where's our Dow? It's 148. Remember, we had what did we talked about in our prep? We had multiple reports coming out. So it's going to take about 5 to 8 minutes after the report comes out. That's where we'll see the opportunities. Okay. If it was just a single report, we might have seen a little more volatility. Okay. So don't be disappointed that it's moving a little slower at this point. Okay. Takes about 5 to 8 minutes after you have multiple reports come out. Figure about 3 to 4 minutes per report. Okay. As far as the delay for price reaction. Come on, crude, you can do it. Make us look good today. Crude oil's looking good. Natural gas. Gold got the breakout. Russell retesting that area. Okay, Dow's approaching. NASDAQ.
Order filled.
All right, just got hit on the Dow. 5 micros.
Order filled.
Look how sketchy that volume is. Very light volume.
Order filled.
And as you look at the volume over there, you might see that there's some gaps in those areas. And you come back down, you look for the last fair value gap area. That'll be your initial target, about 48,072. And let's see what we got. Russell. NASDAQ. Yeah, remember, one of the lessons that we just talked about is if price arrives in that supply zone earlier than the quarter hour, price often goes through it. Okay. I'm on crude. We got to give a little bit of time here. There we go.
Order filled.
Here we go. All right, so my first target, I'm watching his price comes down to about 48, 72, 48,072. Come on, crude, you're so close. Now, if you're looking at a short on Russell, you need to take out that fair value gap and then wait for the next one to form. And nothing pushing lower yet. Right, same thing on the NQ. Very strong move up. We need to see price take out a fair value gap and then create one. That was a nice entry on the NQ earlier. Should have stayed with that one. Well, we got a nice profit off it anyways. Okay, so NASDAQ is not letting up. Let's take a quick look at the NASDAQ stock. We're not seeing anybody sell off yet. Always remember that the futures follow, they do not lead the market. Now, they may lead public sentiment, okay, because the public considers futures to be something telling them what the future price will be, okay, but futures are a derivative. They follow, they don't lead, okay. So this is why I monitor all the large market cap weighted stocks on the NQ to see what the stocks are doing. Okay, now if all the stocks are sideways or you have 4 going up, 4 going down, you're probably going to look at some accumulation. Okay. And right now we're not seeing that anything is really going down. So therefore price is still climbing on the NQ. Okay. All right, small time frame. We're looking now for the first fair value gap to be taken out. I'm not looking for a long here. I'm just looking to manage my risk on the trade. I'm actually would love to see it come back through this the dead space that we've talked about. Yeah, consolidation area. When I identify these dead space areas, okay, I know that the opposing demand is much lower. So there's a good profit potential if price gets back into that range. Okay. So price get back below 48.50. Can we just get that crude? Yeah, we got the crude. All right, let's cancel that. All right, so I took profit on the Q, or sorry, on the crude oil. Okay. Gold is quiet. Hey, we still have an open order on the S&P for a short entry. That's 69.20. And we're not looking to short the NQ until we take out a fair value gap. Take out one, create one. Just like the reversal down here. Took out one fair value gap, created another. And if you use the boxes right here, you can see that that was a fair value gap where we were looking potentially for a profit target or a short entry, depending on the trend. So it took that one out and then created one, shot up, came back down and tested it, took out one, created one, take the entry. I like to be a little more methodic on my entries and exits here, especially doing the live trading with students involved, be a little bit more of a slower approach rather than just, being kind of a hot rod in there. So that's why I didn't take those trades right there. All right. So we're not getting any follow through back to the downside yet. We did have that target. There were some unfilled orders. I'm going to reduce the risk on the trade. I'm going to keep my, let's see, I'm going to go right up here to about 155. I'll give this a little wiggle room to work, but it's not coming down as much as I was anticipating. So therefore it might be still pushing to the upside, okay? So what I'll be looking for to re-engage in this or even feel better about the trade is once it takes out this fair value gap and creates another one, then I have the opportunity to add on to this position. But right now I've adjusted for the risk on this trade. I wasn't getting the immediate follow through that I was anticipating. So I've adjusted my risk. And we have about $25 risk on 5 micro contracts. Okay. Now I'm going to start to feel a little bit better once price takes out this fair value gap. And then another one is created. But think about the time. I put the time remaining in the bar here. 4 minutes left to complete the candle that it's working on right now. So I'm still about 15 minutes, maybe 20 minutes away from a strong fair value gap to play to the downside. Sometimes by knowing that the amount of time you have to wait for the trade to manifest, set up, confirm, okay, if you know the time and then you know approximately number of bars with a fair value gap, it takes 4 bars before you get the entry, 3 bars for the setup, the 4th bar to get in. So you're looking at about 15, 20 minutes before you get a downside fair value gap or downside momentum to come in play. Now, if you look at the clock down at the bottom corner and you say, oh, well, that's going to take us right to the bottom of the hour. Okay, got it. You often see that on the quarter hours when they arrive, unless you're using a 5-minute chart, you can pretty much anticipate the quarter hours. And if there's any news or economic reports coming out, you can help or utilize that information as well. So we're still got about 2 minutes, about 3 minutes left in this candle that's forming. We reduced the risk on the trade because we weren't getting an immediate retracement. And we currently have about $25 risk on the Dow trade. All right, Russell. Now you can use the same analogy. It doesn't have to be a 5-minute chart. You can be using a 3-minute, a 2-minute, or whatever variable you like. Okay. But the time remaining in the bar is a nice way to kind of keep you calm through it, saying, well, if I'm going to follow my rules, I need a setup. Okay. And then most of the time, you'll know the number of bars it takes for that setup to come into play. How many got that nice little trade on crude oil? And it was about a couple $100 on that. Nice. There we go. Now keep in mind with the accumulation that we see on the exchange traded funds that we have broke to the upside. Okay. That means the buyers are down below this range here, below the accumulation. So as price moves higher on whatever time frame you're looking at, you're going to start to look for that reversal pattern, which is referred to as the spring. Okay. And let's see, I have a picture of it here. So the spring, if you just flip this over, you would see that price broke out to the upside. We're looking for a spring reversal, which is going to give us this, like we're seeing on an up move. In this example, we'll see a down move we're looking for that spring reversal to the downside. Okay. So breakouts to the upside, we're looking for supply zones. Okay. We're looking for opportunities to get that momentum back lower. Oh, nice. We got about 29 seconds completing that. Now this is actually a bullish setup. Okay. Prices come back down to a bullish fair value gap. Okay. Although we are short because we had a supply zone up above, we have to remember on a small time frame, this is still bullish until we create a new fair value gap to the downside. So at this point, you can say, well, you know what? I'm going to take my little profit and then wait for the next one, or I'm going to risk my profits right now and $25. Okay. Or you could adjust your stop loss. Right now, we do not have on the small time frame a bearish setup. Okay. We actually have a bullish setup. Okay. For price to continue. So it's your choice right now. This is a place where you would take that small profit and you would wait for things to set up, or you're going to risk your profits that you have right now and $25. Sometimes having those conversations with yourself like that, you can then get a better feel, because it's almost like somebody else telling you, yeah, take the profits, get out, wait for the setup. Okay. Having those conversations, you then make a decision. And if you decide to stay, you decide to stay. Stand by your decision.
Order filled.
Okay. We got stopped out. Okay. So don't be wishy-washy about it. If you decide to stay, then stay. Follow your trade plan. If you decide to take a profit, do the happy dance, wait for the setup to the downside. Okay. All right, so still waiting on the S&P. S&P looking for 69.17.5 for that short entry. S&P is not letting up. We have a fair value gap, a place to splice in to the up move. Okay. So price coming back 68.96. That would be a fair value gap entry in the direction of the trend. Okay. Now, if you're looking at the slope and the steepness of this move, okay, and you say, no, I'm not really ready to do that, that's fine. Okay. But always go over the rules. your rules. What else do we have going on? I think the market's going to quiet down pretty good now. Boy, S&P, NASDAQ, and Dow are just rocking to the upside. But remember, this strong move up on the charts is on light volume. Okay, let's see. I don't know if I have volume on this one. Yeah, I can even see at the bottom, you can see the volume is tapering off. Very substantially as price moves up. That's a negative divergence. Okay. That's why I'm monitoring closely the smaller time frames, looking for the price to take out one of the bullish fair value gaps, create a bearish fair value gap, and that's going to be my earliest indication of where I can take a trade going short. We also have an area of 69.10. What did we see at 69.10? Leg base, right there. All right, for those that have done Mastering the Charts Part 1 and Mastering the Chart Part 2, we can see that we have an accumulation area up here, a sell territory. So we have where the buyers were stepping in, pushing price up, support, support, support. Price made a higher high before it took out the buyers. Sell territory, so looking at 69.13. Looking for a short opportunity there. Yeah, and we have changed up our schedule a little bit. So for those that are involved with some of the other things that we do, we have Mastering the Charts recap and review, which will be about an hour after we complete this this session here. Okay. Yeah, for the month of December, we changed it to doing the Mastering the Charts recap and review on Fridays. Okay, so for the S&P, looking for a short 69.13. Looking for price to looking for the fair value gap to hold 68.95, kind of splice into that momentum. Remember, the momentum right now is on very, very light volume. Momentum in the candles, okay, not in the volume. Let's see, what do we have on the NQ up above this area? Nasdaq's got a long ways to go. Dow is taken out. Oh, and at the start of this session, we had the Dow and the Russell, which were both inside days at the start, and the S&P and the Nasdaq were outside days. All the things that I point out in the pre-market prep, daily overview. Okay, I tried to do a little explanation, okay, but it being part of the course material, I don't go into a lot of teaching because this is just for setting up our day. But I tried to, like your overnight trade range on the indexes for the last 5 or 6 sessions have been narrow. So what does that mean? Well, a narrow range, Globex range versus daily ATR is where the Globex range is less than 40% of the daily ATR. Okay. This often leads to a strong price move in a New York session. Boom, we got it. Also notable, Asian London session, mostly narrow Globex trading range. Okay. When the Asian London session are very quiet, often the bigger moves happen on the New York session, which is pretty much the session many of us trade. Okay. Now, if it's the London and New York session that's mostly quiet, then you can anticipate that the Asian session is going to be more volatile. Okay. Or if it's the New York and Asian session that is very, very quiet in the trade range, then you're expecting the London session to be more volatile. This may be something that you watch and monitor for if you're trading outside of the New York session time. All right, so what do we got going on here? Now we're kind of in that waiting mode. Don't try to pick a top. Wait for a top to present itself. Okay. And that's just my self-talk right now. Oh, got out way too soon on the crude oil. Callie, did you stay in? That was a nice trade on that for the open range. Callie likes to trade crude oil. Put the money in your pocket. Nice. You can see that the fair value gap did work on the S&P. Price came back down, touched it. It's continuing to move up. We're still waiting for that intersection. One of the other things that we covered today, and I'll wrap up with this, is that when you have your supply zones and demand zones identified, price arriving, what time did it arrive into that zone? Did it arrive on the quarter hour? Okay. The top or the bottom? Okay. So having a good idea of what time price arrives in your demand zone or supply zone can also be additional information to make you feel more comfortable about taking on the trade and more comfortable about waiting. So not a lot of trading. We did have a successful trade on the NQ, or sorry, on the Dow. We did have a successful trade on the crude oil. Natural gas we got stopped out on. And we're waiting now for S&P, either 6913 area, which is where we have a leg-based zone. And there was another one. Was it? Just want to come back and double check. Just looking around here. All right. Yeah, we have one on the tick bar, S&P, but I mean, it's still in the same general area, but you might have a smaller risk based on the picture. Okay. Looking for about 6910, 6917 on the tick chart for the S&P. All right. We'll take about an hour break, and then within an hour, I'll start up the Mastering the Charts recap and review. We'll continue to trade through that session as we review some of the sessions that we've done with the live trading room. And the Mastering the Charts recap and review session is there to help support based off of, or help support our students based off of them taking some of our class and course material. So bring your questions. Okay. Everybody will have an open mic. Everybody has ability to share their screen. Okay, so we do a little bit of a lesson, we do a recap, and we do some trading. So it's about 3-part class, okay, where you have the mic privileges and ability to ask questions. So please take advantage of that. We'll see you over in the Mastering Charts recap and review in about 55 minutes. Everybody have a great Friday. And yeah, don't forget to do the happy dance, Callie. That was a nice trade. All right. Have a great Friday. I'll see you over in the Mastering Charts recap and review in about 55 minutes. Bye now.